Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. A lower open Sunday night was recovered. Now, the S&P got back to unchanged, but the Nasdaq roared higher. It's tech driving things, and really what we can do is we can see this here in our heat map. Let's just start off. Let's take a look. Microsoft, Apple, Google, Facebook, Amazon. Those were all green. Google not so much today, but big heavy lifting by some of the other tech, NVIDIA, CRM. You can see this. That's what's driving this market. It's not financials, nothing in the industrials. You did get some positive movement in energies. Crude oil gained some good ground on the session. But take a look here. The S&P, it's back to, this is the settlement line from Friday. It's right where we finished up here today. It's going to be a battleground. And then really the 382 retracement, which 28.45 comes in fairly close to the low that we saw on Thursday of last week before finishing a little better. This area here is going to be another battleground. It would be a potential sell the first test into there, manage your risk though. But what we're seeing again is the S&P lag tech, because take a look at the Nasdaq. Very strong session, big green bar, still faces that 9,000 area. Now this 9,000 roughly is the settlement from where the market was going back. It just settled just below 9,000, going back to before Apple and Amazon's earnings on Thursday. So if you get into the chart, you have this 200 period moving average on a 30-minute bar chart that the market failed off on Thursday and sold off more sharply. That was early morning Friday, and the market sold off sharply. We're running into that again here. The 50% retracement, got that about 88.50, so give or take 25 points from there. It's going to be a heck of a battleground for the Nasdaq heading into tomorrow, but it's all about tech. Does tech continue the recovery? Yeah, Amazon and Apple had some pretty rough finish last week. They're trying to work to recover some of that. But again, it's tech, but it's not just. The United States is looking a lot better, I think, on a charting basis than some of the others. This is the Nikkei. Now, Japan was closed today, but this is the Nikkei breaking down. However you slice it, even from the low, late March, big tail, it broke down on Friday's settlement, was below the trend line. However you slice it, this rising wedge channel, this is a bearish breakdown here. Now again, this did not finish near the lows of the session. It's not just the Nikkei. Look at the MSCI Emerging Markets Index, very similar chart. You're getting these breaking down. Some of the data in Asia has not recovered much. You're seeing China data gave everybody a really good kick, and it really lifted sentiment, but does that continue? I think some of the other data throughout the Asian region is nowhere near recovering what we've seen from China. But again, it's not recovery, it's just a bounce back. You're seeing the manufacturing basically at 50, which is neither expanding or contracting, but that's relative to such dismal numbers the previous month. So again, where do we go from here? We're getting some weaker action, and I think that you're going to see the whole narrative with the trade war. President Trump is coming back at China right now. I think you're going to see some of this weakness. It could be Asia that leads the way. Do we see some of that tonight? But again, China and Japan are on holiday. They're going to be closed again tomorrow. So some of these indices, the Nikkei futures will show it. You're going to be able to see that. The MSCI Emerging Market Index futures, they will show price action movement. So do we get some of that weakness carrying in again through tonight's session? But crude oil was one that did hold up very well. The energies are in this little bit of recovery mode, oversold territory. It was the initial low in crude oil settlement, 23.22 in the July contract. It aligned with 23.40 that we had. This was a resistance. We closed above it, but we still have the 382 retracement. And if the market's in a downtrend, the 382 retracement is crucial for us, and if we stay below there, it's easier to see this market roll back over, and actually it's a bearish. We believe that to be a bearish sign. For now, this is the resistance, about 24.30, so keep in mind we have that in the Morning Express. Keep an eye out for that in the price action in July crude going into tomorrow. Now, gold, it's getting some supportive action from a number of fronts here through the day. The recovery in equities, the recovery in crude oil, all supported gold. Silver did not join the party, and that's holding gold back, but a stronger dollar did not seem to hold gold back. The Treasury's weakening today did not seem to hold gold back. So gold is really nice from this breakout from the inverse head and shoulders. It's now creating a wedge pattern. There's clear support, and we recovered again on Friday from this neckline breakout. Gold is trying to prime for another move, and we need to get above this trend line, 1737, 1740 area. Need to get back above there. Getting above there is going to be bullish, and it should take us to a retest to the 1788 area highs. We believe so. We're very bullish gold. It's an interesting asset right now because it has a number of tailwinds or headwinds pulling and tugging at it, whether it be weakness in the equity markets, which hurt gold for a portion of the late last week, or whether it be deflationary headwinds from crude oil. So again, crude oil moving higher today, the equities moving higher late in the session helped buoy gold, but really gold's price action was very quiet because silver was weaker. Silver it can't seem to get a bid. Watch silver. Silver needs to close above $16, and that is what will help gold break out above 1788 if silver joins that party and take it to 1900. Lastly, let's take a look at the euro. The euro is it had a heck of a finish to last week. This long trend line here from March, euro got a tailwind and went higher, but we believe it to be stalling. Poor session today, supportive to our long dollar thesis, but a lot of resistance here in the euro from that area, from a previous high 110.10 area to about 110.60. The market is stalling out here. This is going to be a tough area to get out above. Gets above that, it's going to be pretty bullish. But stalling out there, we're starting to see it. This weakness could take us back down to these lows because of that trend line there. There's going to be some good support, 109, and we're running into that right now, just below 109. But we are bearish the euro, and we think that's what we're going to see overall is the dollar strengthen. We're going to see some of these other currencies. We saw weakness in the Aussie over the past couple of sessions. We've seen weakness in the Canadian dollar. Again, it's that weakness that could potentially be there in Asia that China was sort of masquerading with some of those what seemed on for face value better data, better manufacturing data was just a 50. It was unchanged. It wasn't expanding, wasn't contracting last week, but those are from dismal levels from 2 months ago, and a month ago that was unchanged at near that 50. So where do we go from here? And we do think we're going to see some renewed weakness, and the market is not pricing in those trade war fears. President Trump, again, talking about a trade war, reparations for China not being on the ball, and talking about what the coronavirus outbreak was, and preparing the rest of the world. So give us a call. We're here to help with things. Tomorrow's going to be another big day. ISM non-manufacturing, 9 a.m. Central Time. We're here to help. 312-278-0500. But remember, futures trading involves substantial risk of loss and is not suitable for all investors.